Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Globalstar, a company that wants to connect you to the world even when you're way off the beaten path. Get ready because this report has got some twists and turns, like finding out your favorite restaurant is changing its entire menu. Here's the gist. Globalstar is holding its yearly meeting in May. Stockholders, or the people who own pieces of the company, get to vote on some important stuff. This includes picking directors, choosing the accounting firm, and approving some deals, one of which involves their main stockholder. It's all about making sure the company is running smoothly and everyone's on the same page. One of the items up for a vote is keeping Ernst & Young, also known as I, as their independent accounting firm for next year. Think of I as the company's financial watchdog, making sure everything adds up correctly. The board wants the stockholders to say yes to this choice. Next, there's this thing called the Thermo Guarantee Agreement. Basically, another company called Thermo, whose boss also happens to be Globalstar's executive chairman, is guaranteeing some of Globalstar's debts. This means if Globalstar can't pay, Thermo will step in now. They want to change this agreement to lower the amount Thermo is guaranteeing from a larger amount to $100 million. Stockholders, except Thermo, get to vote on this. There's a proposal to change the company's rulebook, also known as the Certificate of Incorporation, to protect its officers. This is like adding extra insurance for the people in charge, so they're not personally responsible if things go wrong unless they do something really bad, like break the law on purpose. All the stockholders get to vote on this, but with some special counting rules. Now, who gets to vote? If you owned Globalstar stock on March 25, you're in. Each share gets one vote, but there's a big stockholder, Thermo, and they don't get to vote on everything, especially the Thermo Guarantee Agreement. It's like saying the person who's selling you something can't vote on whether you should buy it. If you don't vote, it depends on how your shares are held. If you're a registered stockholder, your shares just won't be counted. But if your shares are held by a broker, they can vote for you on some routine items, like choosing the accounting firm, but not on bigger decisions like picking directors or the Thermo deal. The report also talks about the company's risk management. The board keeps an eye on things like cybersecurity, working to prevent any major problems like data breaches. They're also thinking about the environment and how the company affects it. Let's look at the folks running the show, starting with the directors. There are 7 of them, and the stockholders get to elect 3 new ones at this meeting. These people bring different skills to the table, like experience in telecommunications, finance, and running companies. There are committees such as the Audit Committee, which is like the financial police, making sure the numbers are correct. The Compensation Committee decides how much the top executives get paid, and the Strategic Review Committee looks at major deals and changes to make sure they're good for the company, especially when Thermo is involved. Speaking of the financials, let's quickly glance at what they paid their accountants. In 2024, they spent about $225,000 for tax-related help. The report reveals what kind of compensation the top executives are getting. In addition to their salary, they are getting restricted stock, which will become their property in the future, assuming certain conditions are met. The report also details how the CEO, Paul Jacobs, was compensated. It seems like in 2023, a significant amount of his compensation was tied to stock awards, totaling over $36 million in 20 salary, bonus, and stock awards. Finally, a word on pay equity. In 2024, the CEO made about 10 times what the average Globalstar employee made. This number is required to be reported, so stockholders have a sense of how executive pay compares to the rest of the company. Now for the potentially juicy part, deals with related parties. Globalstar reimbursed Thermo about $75,000 for expenses and paid around $621,000 for the consultant and employee services. They also leased their headquarters from a Thermo-related company, costing them $1.16 million a year. And they purchased land with a value of $500,000 from Thermo Aboutland. It's all above board, but it's good to see where the money's going. All in all, this filing gives a snapshot of Globalstar's health and governance. It's a mix of regular business, like picking accountants, and more complex deals, like the Thermo Guarantee. Ultimately, the stockholders get to weigh in and help steer the company forward. Globalstar is working to build connectivity, and it is still working to get the business up to par and generate profit. I like that they are trying new technologies. However, there are many challenges ahead. A lot of this relies on their deal with Thermo. That said, given the level of their existing debt and the competitive environment, it is not for the faint of heart. Thanks for tuning in. If you found this decoder useful, please give us a like, leave a comment, and subscribe for more deep dives into the corporate world.